Good people, what's going on? How is everybody doing? How everybody doing? I guess you're having a great start to your trading week, and I guess you use the weekend to fuel yourself and to prepare yourself for this trading week. The super Harlem, and I'm here with another video. So today's video gonna be a trade breakdown based on the previous video I had of potential direction on NFP. I think I analyzed eight, eight or seven pairs for NFP because some pairs are just doing some BS. So I didn't want to be too focused on such pairs, but I think I had the NAS, I had gold, I had German 30, I had US 30. My favorite was US 30 at that time, but unfortunately, I didn't take a trade because I saw something on the NAS compared to US 30. And I think I had USD CAD, Tesla, I never gave a fuck. Bitcoin, I never gave a fuck. Ethereum, I think I also never gave a fuck. Litecoin, I think I looked at something, and oil, I think I also looked at something, but I won't look at every page just to look at what happened. I will just break down what I did because I did plan this trade like I shared on YouTube, and I did trade this plan like I planned it, right? So enough of the capping. So always remember that I have important zones that I use. I'm bullish above and bearish below, which is support. On my key level, I'm bullish above and I'm bearish below. On my resistance, I'm bullish above and I'm bearish below. So now this is just basics of Forex. Once you know your zones and once you stick to your zones, whatever happens above that zone, you need to know what to do. Whatever happens below, you know what to do. But you need to mainly focus on what is happening on your current price. Is to forget about your zones a little. Just focus on what's happening on current price. Are we still showing signs of us being bullish or us being bearish? So now, when you look at what once happened on my key level, looking at current price of this channel, right? When you look at what happened right there, price kind of like created that one touch and pushed to the upside, coming back for the second touch. So if you use trend lines to confirm or to add confluence into your trades, I don't know, break wall, whether you call it a diagonal resistance or diagonal support or a break wall, it is what it is, right? So if you use it to confirm your entries, always remember that we have a key level, we are above our key level, and we on our trend line. I have two confluences into why I need to buy. The third confluence would be prices rejecting, right? And then price that were pushed to the upside. So now I know that like I have a zone that I need to focus on above this key level because this is my key level, right? And then unfortunately, price traded below. So with a breakout and a break back in, we know that we need a retest above to look to be bullish. But unfortunately, price took us out, which was a trade I took on Thursday. Price took us out, unfortunately. We took buys right there, and unfortunately, price did continue moving to the downside. So creating some type of double top, some type of double bottom on current price, right? And then price did what? Continued moving to the upside. So like people are saying on NFP, I think price was still trading somewhere right there. I did say on NFP that if price trades above my key level, then I'm obviously more bullish. But if price continues trading below, then I would look for that momentum, for that bear depletion, for that bullish depletion and that bear momentum and add my trades, right? So now, when I saw now price having a close above this very same zone, my key level basically, all I was looking for, or all I added into my mind was that if it happens that like price pushes and comes back, then I would look to be bullish, right? But at the
Oh, are you still watching the video right now? I'm sorry for the interruption, but like you guys know it that the HSCC and Circle of Traders, they have partnered. What is the HSCC? The HSCC is the Highly Street Crypto Trading, it's the Highly Street Crypto Club, which was started and founded by Mr. Rafsay with a 12-year experience in the crypto markets. The HSCC is a arbitrage crypto trading platform which has led into becoming one of the biggest trading platforms in the world. At the HSCC, they are highly committed into building an ecosystem arbitrage trading crypto platform which generates profits for all retail investors around the globe. They have 4 different plans, to earn and invest hefty profits from. You don't want to miss this deal. They start with as little as $50 up and until an unlimited funded deal, right? It depends on what you're comfortable with and what you'll be willing to take part from. I'm gonna leave the link on the description, I'm gonna leave the link on my bio, and I'm gonna make sure that Circle of Traders and the HSCC help you out in the crypto markets from beginner up and until to professional all the way. You don't want to miss this great deal. Take part into it and something from it, and let the HSCC and Circle of Traders be there for you in the crypto markets. We're signing out.
Same time, you need to remember that we are above a key level, right? We broke out of a key level and we kind of broke back in of a key level. So obviously from breaking out of support, basically, like example, if you break out of support below and you break back in above, obviously you need to wait for that retest above to confirm or to show signs that price is really respecting your support or price is really trading above support. But if it happens that like price goes out again, then that's a wrong entry. You just need to accept it. So during NFP, when price came back on NFP below my support and came back above my support, my key level, I mean, people not support key level. Or I was also looking for it was once this candlestick closes above the very same zone, then I'm looking to be bullish. Fuck what will happen on the coming candle, right? A lot of things could have happened, people. A lot of things could have happened. A lot. Price could have took me out. Price could have respected me, right? So when I now saw that obviously price on NFP broke out on NFP, right? Remember that we had a breakout of on NFP and we have a break back in of this racing zone, more like a rejection candle, which is pushed by fundamentals because it was fundamentals at that time. Technical analysis wasn't playing a role in such movements, right? So let's repeat this. I know that like obviously price is trading below my key level. When I look at current price, I'm still below my key level. I told myself that if price continues above my key level, I'll wait for the retest above to continue to the upside in terms of price respecting my key level. But if price trades below, like it continues trading below, I will look for my bullish depletion. I would look for the bulls to step out of the charts, and I would look for the bears to step in of the charts. How do I see that? Candlesticks. If I'm looking for bullish depletion, bullish candlesticks will start depleting. They will start being small and small and small and small and small. In bear momentum, I would start seeing bullish candlesticks like bear engulfing candlesticks, a full bear candle close, some things like that, right? So in this instance, price had a bullish close above. So with a bullish close above, you need to wait for the retest above. So this wasn't really a retest because it was also pushed by fundamentals, I repeat. But in some terms, all I can say is because I planned this trade that if price trades above and comes back for a retest above in a close above of my key level and my candlesticks, then I'm most probably looking to be more bullish. A lot of things could have happened, I repeat. Price could have took me out because it was NFP and it was New York's open, people. It was NFP and it was New York open. But because I was willing to take the risk and I was comfortable with the risk, then price unfortunately gave me what I was looking for and I took it. But unfortunately, I was looking for a bigger target, right? For a bigger target of a 142 pip. But I repeat, because I was comfortable with what price gave me and what I was looking for was what I took. I just stepped out of the charts and I let the markets play the way they want to play, right? So people, let me just break this down before I end this video. If you're having support and you see price trading below support, you need to look to be more bullish, to be more bearish because price is below the buying zone. But if it happens that price trades above, you need to wait for signs that price is really respecting your support and look to be bullish. Same thing on resistance. If price is trading above resistance, you need to look to be bullish. But if you see signs or if price is giving you signs that we are failing to continue bullish, then you need to wait for price to break back in and give you signs that we are having that big momentum and that bullish depletion and look to be bearish. Same thing on a key level. Key level is a zone. Well, basically, I didn't explain what is a key level, but a key level is a zone which you use to be bullish of prices trading above, which you use to be bearish of prices trading below, right? You can go check it out over the internet. I don't need to explain it that much. But without further ado, this is how I took this trade based on my NFP analysis and based on what I was looking for on NFP. I don't trade fundamentals. I just stick to my technical and I just look at pure price action. Fundamentals are just cherry on top. We use them to add volume and confluence and volatility into the market spot. I don't trade fundamentals. Without further ado, this is your boy Harlan. I'm out.